Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be discussing another problem which is related to the consignment journal entries that we have discussed earlier. So this will be all about consignment transaction, and this is the first illustration that we'll be discussing on it. So when we have discussed about the journal entries that is related to the consignment account, we are now in the process of using those journal entries as to the illustration that we'll be discussing further. We'll be noting down this illustration. Make sure you note down the illustration for your reference as well. And we'll be understanding how the journal entries are supposed to be passed. If you remember, we have done in the previous videos the journal entries for all the transactions that are supposed to be recorded by the consignee and the consigner, or rather the consigner itself. So when we have to discuss about those journal entries, let us understand how we can frame those consigner journal entries into a form of an illustration that will help you understand what exactly are the journal entries that we have to pass here and in what order do we have to pass them. So let's figure it out with an illustration that we'll be mentioning down here. So the illustration has been mentioned here. We have mentioned all the details that are required as a part of the illustration. So let's understand what has been actually written down here for your reference. Give you a brief of this question or rather illustration. There are two parties to this transaction or to this business. We have Mr. X and we have Mr. Y. X is the consigner, Y is the consignee. That means X has sent certain goods to Y and Y is supposed to sell them on behalf of X. Remember this thing, it will be easy for you to understand the whole illustration and then to figure out how the journal entries are supposed to be passed here. On 1st of July 2016, X, that is the consigner, sent certain goods to Y, who is the consignee, amounting to rupees 50,000 and spent rupees 1,000 on packing, etc. That means this is an expense that is bared by the consigner for packing those goods and sending it to Y. On 3rd of July 2016, Y received the goods and he sent his acceptance to X for an amount of rupees 30,000, which is payable at 3 months. That means a bills of exchange was sent out to X stating that 30,000 will be paid up at the period of 3 months, or rather for a period of 3 months. Within 3 months this will be paid off. Now Y made certain expenses. Once the goods he received it, he paid 2,000 on insurance and cartage. He paid rupees 500 on the go down rent and rupees 300 on the actual insurance, or rather the actual insurance of the goods what he had done. So these are the expenses that is done by the consignee here once the goods are received. On 31st of December, X, or rather X, received an account sales from Y. So this was the details of the sales that has been done until that period from July till December, and the details of everything was sent in this account sales, which includes the due to X itself. That means the amount due to X. And when we talk about the account sales, it consists of the details of stating that 4/5 of the goods were sold out for rupees 55,000. So whatever quantity of goods he received, out of that 4/5 of the goods were sold out for 55,000 rupees. Now the next line states that Y is entitled to a commission of 10%. That means he is supposed to receive 10% commission on the sales done. Out of one of the customers, that means whatever customers Y sold out the goods to, out of them one customer became insolvent and he wasn't able to pay the amount due, which is rupees 600 to him. So that customer was supposed to pay rupees 600 to Y, but he couldn't do that. He failed on it. We have to prepare the ledger account and show the journal entries in the books of the consigner here. Now I guess you have understood what exactly do we have to do and what exactly do we have to show in this specific transaction. So let's go ahead and prepare the journal entries first, post which we'll be forming the ledger accounts here. So prepare the format for the journal entries. Let's start with the first entry that we have to pass, which is on the 1st of July. The first entry that refers to is the consignment account which was done, or rather the consignment which was sent to Y. So when we have to pass this entry, we have to mention the consignment sent to Y account debit because he is the receiver, and the consignment that has been sent. So the entry will be consignment sent to Y account debit to goods sent on consignment account and the amount of the actual consignment that has been sent here. So here two ledgers are opened. That means consignment account, or rather consignment sent to Y, that is one account, and goods sent on consignment account, which is the second account. These two accounts will be very frequent in the journal entries that we'll be doing further, and hence these ledgers are supposed to be opened up so that we understand what exactly we have to follow up, or rather what exactly do we have to post in these ledgers. According to these journal entries that will be passing, you'll be able to figure out the ledgers that you have to prepare based on these journal entries itself. Now that the first entry has been mentioned, let's note down the second entry. Now, the second entry is again related to the consignment expense that was bared by the consigner, or rather X account. So whenever such expense is supposed to be recorded, again the consignment account is supposed to be debited. Hence, consignment sent to Y account will be debited, to bank account will be credited, as the case may be. If it is cash, then the cash account will be credited accordingly with the amount that is 1000 as per the illustration. Now, any expense will be debited to the consignment account. Any income that you receive on the consignment will be credited to the consignment account. So make sure this logic is very clear with you while passing the journal entries here. Now, the third entry will be on 3rd of July. Remember, in the illustration, they have mentioned that Y sent his acceptance with the bill source receivable, which was for 30,000 payable at 3 months. Now, this is the same thing which has to be mentioned here. Make sure when such an advance or a receipt is made, or rather sent by the consignee, or any kind of bills receivable is sent by the consignee, then in such case, his personal account will be credited. In the first two entries, you see his personal account isn't credited or debited at all because he is not personally involved in any of these transactions. However, in this specific transaction, he is personally involved, hence bills receivable, that is an asset for us, hence it is debited, and the person who is sending it will be credited, rather his personal account will be credited. So the entry here will be bills receivable account debit to Y account, and the amount will be 30,000 here. Now the next entry will be the bills receivable that we have received. We will assume that this bills receivable was adhered to and matured. So the date here has been mentioned as 6th of October. Considering 3rd of July the bill was accepted, 3 months after that, that means July, August, September, and that is done. So 3rd of October is the date, adding 3 days of grace period, which will be 6th of October. So that date has been mentioned here. Now, when you have to go ahead and understand what is the entry that will be passing here, is the regular entry that will be passing when the bill is matured, when it is kept with us. That means bank account debit to bills receivable account. Now, this entry has been passed on the assumption that the bill has been met and the amount has been received for the 30,000 rupees. For example, or rather there has been a note that has been mentioned here. Let me highlight that. Now, in case the note states that if such a bill was discounted with the bank or it has been endorsed to someone else, then in such a case, the entry will be passed accordingly, and the same entry will be mentioned here as matured unless and until anything has been mentioned in the specific illustration stating that the bill was dishonored, etc. related to it. If that is the case, you have to pass the dishonored entry. But if in case there has been nothing mentioned, you'll assume that the bill has been honored and accordingly the entry will be passed here. So that is one additional entry that you have to make sure that it is an hidden adjustment, or rather it is an hidden entry that you have to figure out whenever such transaction comes into the question. Let's go on to the next transaction details, or rather the next journal entry. Now the next few entries will be related to the transaction that happened on the account sale. That means on 31st of December, when the account sale was sent to us, will be referring to those transactions and passing the journal entries according to them. So let's record the first transaction entry that is related to 31st of December. Now on 31st of December, the first transaction that we have to mention here is the transaction of sale. So if you remember in the illustration, we had mentioned that out of the goods that was sent to Y, 4/5 of the goods were sold out for 55,000. So whenever a sale transaction happens, the consignee account, or rather the personal account of the consignee, has to be debited because he is the person selling it, and the consignment account will be credited here because it is an income for us, hence consignment account is credited as discussed earlier. Now the next transaction that we have to record here is the expenses bared by the consignee and the bad debts that occurred during that time. So if you remember, 2,000 is the kind of expense that was paid by the consignee, 500 for go down rent, 300 for insurance, and the 2,000 amount was for cartage, along with 600 as bad debts. If you total this up, the total amount is 3,400. Now as this is an expense, hence consignment account will be debited and his personal account will be credited here. Hence, the entry that we have mentioned here is consignment account debit to Y account, or rather consignment to Y account debit to Y account. The amount of 3,400 has been mentioned, and individually the amount that has been mentioned here, or rather the bifurcation of 3,400 has been also mentioned in the entry for your reference. Now the next entry will be referred to the commission that is due to Y. If you remember, 10% is the commission that was due, and it was on the sales amount. So 55,000 is the sales amount, 10% of that will be 5,500, and again this is an expense, so consignment sent to Y account will be debited, and Y account, or rather his personal account, will be credited because that account is supposed to receive the amount here. Hence the entry will be consignment to Y account to Y account here will be credited with an amount of 5,500, which is 10% of the actual sales done. Now the next entry will refer to the remittance that may accompany the account sales. That means 55,000 is the account sale total that we have done, or rather the sales that has been done, out of which 30,000 has been already sent to us as a part of bills receivable, and the balance will be 25,000. Now out of the 25,000, the other expenses are supposed to be subtracted. That is 3,400 for all the consignment expenses, and 5,500 as a part of the commission will be subtracted from that. If you subtract it, you have a balance of 16,100, which is supposed to be received by us. Hence the entry here will be bank account debit to Y account with an amount of 16,100. Now the earlier 31st December entries were a part where we have mentioned only about account sales. Now let's talk about the unsold goods that are a part of this question. Now the next entry that we have mentioned here is the unsold goods. If you remember, 4/5 of the goods were sold. That means 1/5 of the goods were still unsold. Here, when we have to calculate the cost of inventory, or rather the consignment stock inventory that we have to discuss about, we have to first derive the cost. Now that will include 1/5 of the total goods. That means that was sent on consignment. So here 50,000 were the total goods that was sent. 1/5 of it was still not sold, or rather unsold, so that is an amount of 10,000 here. I'm highlighting each of it in blue so that you can understand what we are discussing about. Once this is done, two kinds of expenses are supposed to be taken into consideration: all the expenses paid by the consignor and direct expenses paid by the consignee to receive the goods. Now here, all the expenses paid by the consignor will be accountable first. So consignor sent around, or rather the goods that was sent it had an expense of 1,000 on it. So 1/5 of that will be also calculated, which is for an amount of 200. Once the consignor expense has been taken into consideration, consignee's direct expense, that is freight charge or cartage charge, has to be taken into consideration. Only that charge has to be taken into consideration, which is related only until receiving of goods. Whatever expenses there after the goods are received, so whatever expenses that are directly related to the consignee will be taken into consideration. In this case it is 2,000, so 1/5 of that will be 400 rupees. So if you total each of it, it will be 10,600 rupees. Now this amount has to be shown as an entry here. Now consignment stock will be debited because it is an asset for us, and this will be, or simultaneously consignment to Y account will be credited because that is an unsold good which is being sent back to us. So 10,600 is the entry, or rather the amount of the journal entry that we have passed here. Consignment stock account debit. The other name for this will be inventory on consignment or inventory of consignment account. Anything can be mentioned, rather mention it consignment of stock, and that will be debited, and on the simultaneous side it will be credited with inventory, or rather the consignment to Y account will be credited here with the same amount, 10,600. There's a small note that we have mentioned here. This consignment is an asset for us, hence in the current year's balance sheet it will be shown in the asset side. However, in the next year it will be moved to the consignment account, or rather debited to the consignment account. Let's understand the next few entries that we have to discuss further. Now we have purposely kept these two entries blank here for you to understand that the ledger account has to be prepared first for all those transactions or all those journal entries that we have passed, after which we can determine whether we have profit or loss in this consignment, and after that derivation we can figure out what is the closing balance of this specific consignment. So these are the two closing entries, because before that we have closed each and every transaction related to it, which is either hidden or either revealed. Now apart from that, we'll be keeping this page blank. We'll be going ahead, or rather we'll be going ahead with the preparation of ledger first, and after that we'll come here and then rewrite these journal entries for your reference. So I'm keeping this page aside. After this we'll be going ahead with the ledger formation first, and then we'll come back on this sheet. So we'll prepare the ledger accounts first and then figure out how many ledger accounts we basically have to prepare. We can understand we would have only 4 to 5 ledger accounts, so you can go through the journal entries and figure out how many ledger accounts are actually there, excluding the bank and every other details. Like we have goods sent to consignment account, or rather the goods account which are related to personal account of Y. So we have inventories account, we have goods sent to consignment account, we have consignment account itself, and we have the Y personal account. So these all accounts will be there for sure, and there will be certain else details that will be mentioned in it, but excluding the bank and cash account, let's exclude that one and prepare everything on the basis of the other that is available here. So the first ledger that we'll be preparing here has been mentioned here, that is consignment to Y account. Now when we go ahead with this, all the transactions that we have passed right now, wherever the consignment account has been debited will be mentioned here, debit or credit items will be mentioned here according to the journal entries that has been passed. So let's do that. Now if you see the first entry that was passed on 1st of July, consignment to Y account debit to goods sent on consignment account. So the consignment to Y account was debited. On the debit side we'll have this specific entry that has been passed. Accordingly we have to go ahead and pass such journal entries so that we can figure out what is there on the debit side and what is there on the credit side. So if the consignment to Y account has been debited here, then the entry that has been mentioned on the credit side of it will be mentioned on the debit side here, just for the reference of the amount. So accordingly we have to go ahead and pass the journal entries. Let's pass it for this specific ledger. So the items that are related to the consignment to Y account have been already mentioned here in this specific ledger. Let's figure out which side is bigger as compared to the debit side or credit side. That means if the credit side is bigger, that means debit side is shorter, which states that there is a profit. If the debit side is higher as compared to the credit side, that means there is a loss. So let's figure out which side is more. So it is clearly stated that the credit side is more as compared to the debit side, that is 65,600 is the total of the credit side. Let's figure out how much is the profit here. Now the ledger that we have created has shown a profit of 5,700. That means this is one of the entry that we have to pass here as it comes to profit and loss account. So let's get that sheet back and pass that journal entry for your reference. So as you can see, we have passed the entry as well, which states consignment account to Y account debit or consignment to Y account debit to profit and loss account. If you see, this is the same journal entry that we have passed, and the effect is also seen in the ledger account, which states that on the consignment account Y, or rather consignment to Y account, the ledger that has been created on the debit side, it has been mentioned as to profit and loss account to, which is amounting to 5,700, and accordingly it has been mentioned there. Now let's take this sheet off, prepare the next ledger and figure out whether that sheet gives us the closing entries, that is the stock closing entry here. Let's prepare the next ledger that we have to go ahead while it comes to preparation of ledger account. Now the next account that refers to is, if you remember the first entry that was passed, that means consignment to Y account debit to goods sent on consignment account. So these two ledger accounts are supposed to be created first, so that we have done. Now this account will be settled here, and that will be the closing entry that is required in the previous journal entry sheet. Now here, if you remember the entry that was passed, that is consignment to Y account debit to goods sent on consignment. So on the credit side of goods sent to consignment account, it will be mentioned as by consignment to Y or by consignment account 50,000, and this will be moved to the trading account, which is the balance that will be transferred. So the balance here is 50,000 and that will be moved to trading account here. So the closing entry here that is supposed to be passed in the journal entries is consignment, or rather goods sent on consignment account debit to trading account here. So this is how this account will be closed, as this is the balance that is pending. So let's move, or rather get that journal entry sheet back and pass the closing entry there. So the closing entry that was required here has been mentioned, and the narration that has to be mentioned is the goods sent on closing account, or rather the goods sent to consignment account has to be closed, which was created earlier. In the first entry it was credited, now it has been debited here, and the balance has been moved to trading account now. So this marks the closure of journal entries. Let's prepare the other two ledger accounts that we have to prepare, that is the Wise personal account and the other inventory account that we have to prepare here. So we'll be now preparing the Wise personal account. All the entries that were passed earlier will be moved here in the chronological order itself. As you can see, this is a personal account, hence there is no balance that will be mentioned here. It is a self-balancing account, hence it is clear cut that all the journal entries that will pass or that has been passed here earlier will give you a clear-cut balancing figure itself. So that means there is no debit balance or credit balance that has to be mentioned here. Now when this is an asset for us, the same thing, the balance will be mentioned on the credit side, and that will be moved to the consignment account, which has been done as the balance has been carried forward in 1st of Jan 2017. So accordingly all these ledger accounts have been prepared, and similarly they have been closed. So I hope this is the illustration that will give you a brief description about how we are going to pass the journal entries and what exactly do we have to pass in the journal entries for your reference. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.